Hello and welcome to Smaulgld's In Case You Missed It blog post for the week ended June 11th, 2016. Top gold and silver stories for the week. You can check out the blog post and all the links and charts that we have if they don't render too well on your screen here over at smaulgld.com. All right, let's dive into what happened last week. Well, the big economic news of the week was the carryover impact of the poor jobs report we had last Friday. That did little in the Fed's mind, and we'll go through some of the comments from Fed Chair Yellen, Fed Bank President Rosengren, and Meister from the Fed talking about still keeping rate hikes as part of their plan this year, despite the fact that the job market came in well below expectations. I think it was 38,000 new jobs created. This time, though, however, the markets did not react to these Feds and their yak attack trying to talk up rate hikes, as gold and silver ignored it basically and rose as if there's not going to be rate hikes, or if there are going to be rate hikes, there's going to be a rate hike and it's not going to do too much to slow the progress that gold and silver made. So gold closed up about $30 last week, up to about 1273, up from 1243, and silver closed up about 90 cents, all the way up to $17.28. The gold silver ratio ended at 73.64, which represented an improvement over recent times when the gold silver ratio had climbed up to about 80 to 1. You can check out the gold silver ratio at this link here, gold silver ratio, where we have a live chart, a 1 month chart, a 5-year chart, a 10-year chart. We go all the way up to I think about 20-30 years, where you can check out the historic gold silver ratio. And as you know, or you may know, that the gold silver ratio is near its kind of all-time high of about 82 to 1. It's dropped down a bit recently because gold had a nice week, but it's still at elevated levels. This week's chart of the week is the American Silver Eagle premiums chart, which we started covering before the shortage last summer, when Silver Eagle premium jumped up to about 50%. They're down about 15%. They're kind of near pretty much, I wouldn't say all-time lows, but very low, because the U.S. Mint, although that they are putting Silver Eagles on allocation to their authorized purchasers, they're still at about 1 million a week. So what's happening is the authorized purchasers are buying those. They're not necessarily selling them all, but they've been buying them all in anticipation that they may run out. So the fact that the premiums are low indicates that the dealers have a lot of Silver Eagles, and they're going to start getting rid of them. And there was if you want to check it out, at Silver Doctors, the Doc and Eric Dubin did a nice summary of what the dealers' strategy is right now, is to kind of sell off some of their inventory that they purchased if the U.S. Mint goes off allocation. This way, if they sell down their inventory, they can buy back more and get in good graces with the U.S. Mint for getting more higher allocations, so they can stock up even more if indeed there's an eventual shortage of Silver Eagles. This way they can profit later on in the year when they can jack premiums up again. As you can see, they make a lot of money when there's a Silver Eagle shortage. They can jack up their premiums, and then of course they sell them to dealers who then jack up their premiums. But right now they're at a good level. You can get Silver Eagles for the authorized purchasers pay $2 over spot for each Silver Eagle from the U.S. Mint, and the dealers, the online dealers, if they're not authorized purchasers that buy them from authorized purchasers, are generally selling them now at a very small markup from the $2 that the Mint charges the authorized purchaser. So here are the stories that we commented on during the week. One you might have missed at the very beginning of the week on Sunday, we saw the British banknotes are on the way out. They're taking the £5 note and they're making that into a plastic note, and they're trying to move all the currency over to either plastic notes or plastic in general. Again, you can check out this link at smaulgld.com and the blog post in case you missed it for the week ended June 11th, 2016. There was a report on Ghana. They're starting to produce more gold. Here's one that was very interesting. You can check this one out. The Swiss rejected thankfully, a basic income proposal that would have provided each Swiss citizen with about $30,000 or $40,000 a year, just so they could live. The Swiss have this process of direct democracy where if they get enough votes to put something on the ballot, the whole country gets to vote on it. And some people put together this ballot initiative that would have given every Swiss person free money, but it got shut down. I think it was 60, 70% against. Brexit is in the news again, and all of the major parties, all of the establishment press is against Brexit, but it seems the people are for it. And the Danish Prime Minister, he weighed in talking about why Denmark is going to stay in the EU no matter what, and advising his citizens don't even think about doing a exit or Danish exit from the European Union. And the fear is that this could snowball, that if Britain votes to leave the EU, that other countries may also start eyeing the exit, and then the ones that were trying to get in may decide they're not interested in. So the remaining countries in the EU have a vested interest to kind of maintain that union, and they don't want their citizens getting all too excited about a potential Brexit. We'll be following that story, and the vote is on June 23rd, I believe. So there'll be a lot of press, a lot of fear mongering leading up to that. We did a podcast with Rory over at the Daily Coin. You could check that out. We talked about a lot of things about the gold and silver market. One of the things we mentioned was that Russia is putting together a bigger pile of gold, or is catching up to China and stacking their gold for their reserves faster than China. Here's a chart that shows that. Again, if you can't see the chart very clearly on your screen, just go over to Smaulgld.com. Check out this blog post in case you missed it for the week ended June 11th, 2016. You can see not only this chart better, but there's also other charts that are associated with the blog post and the podcast at this link. Some interesting stories on gold. Gold imports have been dropping 50% in India, and that's basically because they've got import duties on it. But it is cutting into the demand overall for gold, because India is either the first or second largest gold consumer in the world next to China, and when their imports drop, at least their official imports, it appears that the demand for gold, physical demand, is headed down. So that's something important to keep an eye on. My view is that they're probably importing just as much. It's just not being recorded officially as they are smuggling gold into India. China, as we've discussed before, is going around the globe. Not just, China's already the #1 gold mining country in the world, but that doesn't count. That's what they mine domestically, but that doesn't count what they mine outside of China through their interest in other gold mines. And there's a story here about what they're getting from Tajikistan. There was a story in the Bank of Montreal. They're going to file to sell these gold deposit receipts to people where supposedly they hold the gold for you and it's safe and it's secure. Gotta did a story on it, analyzing the SEC's filing, the SEC filing that the Bank of Montreal made, or the regulatory filing that they made. It showed that the Bank of Montreal wanted to highlight all the risks that are involved in programs similar to theirs, but that their program didn't have these types of empty vault risks and other things. So that's an interesting story to follow up on if you're interested in paper gold. Gold mine approved in New Zealand. It was an interesting story about Japan issuing a contest, or I don't know what it is, but supposedly there's something you can do at a McDonald's in Japan, and you can get a 18-karat chicken McNugget with your fries. It's an interesting story. There's pictures of that nugget at these two links here. And Fed chatter, something we always follow. We mentioned at the top of the broadcast that the rate hike yak attack is still in effect. Fed President Rosengren, he mentioned, yes, there was a poor job report, but, Fed rate hikes are coming. Yellen spoke on Monday, this day, and we wondered whether she'd talk about patience and global uncertainty, and whether the jobs market was transitory, what happened with the poor jobs report on Monday. And we were 3 for 3. Yellen mentioned global uncertainties. She mentioned that, or she hoped that the jobs report was transitory. And then later on in the day, Fed President Lockhart, though, he was a little dovish. He said we should be patient about raising rates. Yellen didn't say be patient. President Lockhart did. Yellen kind of indicated that she was in favor of rate hikes. You can see the text of Janet Yellen's speech here if you want to click on that. You can read all the words of wisdom if you can stay awake. One of the things she said that I read in the text was that rate hikes would be appropriate provided that the labor market conditions strengthen further. Well, who's she kidding? Labor market conditions are deteriorating. So she sounds like she wrote this speech before the job market number came out on a Friday. She delivered the speech on Monday, and she just acted as if that didn't happen, that the labor market conditions are strengthening, and she just ignored the Friday job report. Now, this ties into one of the beliefs I have is that the Fed's hell-bent on raising rates no matter what. So they're just going to pretend they don't see certain data or just interpret it a different way or pretend it's transitory. If they want to raise rates, they're going to raise rates, and they'll come up with a reason to do so. Because otherwise, there's no point in them constantly talking about raising rates based on the data when the data indicates they shouldn't raise rates. It's an interesting story. You can check out scientists using silver to make light shine brighter. U.S. Mint opened up the month of June with a decent amount of American Silver Eagle sales, 720,000. It was below the million for the week allocation, so the amounts being sold to the authorized purchaser seem to be a bit lower than the last. Remember, the U.S. Mint sold over 4 million American Silver Eagles every month in January, February, March, April, and May, and so June is starting out a bit slower. But June's traditionally a slow month. They sold about 16,500 American Gold Eagles, and they're selling some of those American Gold Buffalo coins. They also sold the third coin in America, the beautiful series this year, the Harper's Ferry National Historic Park 5-ounce silver coin. They sold 33,000 of those. On June 7th, we got the report on the People's Bank of China's gold purchases, and they halted their gold purchases in May. That's the People's Bank of China. No gold added to the People's Bank of China's gold reserves. Now, many people say they're lying and that's not true. They're always adding gold, and I would agree with you, but we're talking about the People's Bank of China, not China itself. There are plenty ways of getting gold into China. China mines a lot of gold. It just doesn't all end up at the People's Bank of China. There's no need for all their gold to be in one place, sitting in reserves at the People's Bank of China. If you're interested, I've listed the places where the gold may be, probably is, in the case of China's missing gold. You can check that out. In fact, I covered a story where China's president confirmed the practice of moving official reserve assets to other entities in China. Click on those two. You can see why what the People's Bank of China may indeed be correct. They may not be lying at all. It's just that China's gold, all of it, isn't at the People's Bank of China. We also reported on the sales of American Gold Buffalo coins. This is a popular coin. This was the second highest May sales of this coin. It's a 1-ounce, 24-karat gold coin. The American Silver Eagle is 22 karat. It's an important distinction. This was kind of the U.S. Mint's answer to the Canadian Gold Maple Leaf, which is also 24 karat. It was introduced in 2006, and it doesn't sell as much as the Gold Eagle, but it has a decent sales. If you could see this chart better on Smaulgld.com, and also if you go to the link, you can see other charts about the American Gold Buffalo coin as well. There were a lot of stories this week about people finding gold. There was a 500-year-old shipwreck found off the coast of the Namibian desert. There was a cool story about a hotel where you can pay for your stay there and buy stuff with gold. There was a story of a guy who found an old Greek gold crown, it's like 2,300 years old, that his uncle had given to him. It was just sitting in a box of newspapers that he had. There's a nice interview on S&P Gunsberg on Commodities Rally talking about $1,800 gold. You can check that out. It's an audio. It's a couple of minutes worth listening to. More information on India's gold imports dropping 51% in May. That's significant. If you're interested in cleaning your silver, here's a link that talks about a better and eco-friendly way to clean silver. And then there were some coins, rare coins, discovered in Israel. Again, another nice find. U.S. economic data, non-farm productivity down, labor costs up. That's not very good. People are getting paid more and working not as hard. U.S. Mint sales update. Still, this is June, and they went up to 113,000 the next time they reported. But you see, they're still under a million for the after the first week, 833,000. And the Gold Eagles are selling okay. They're about 17,000 so far as of June 7th. We covered the sales of America, the beautiful coins. This year, this is the second highest selling year already of these types of coins. These are 5 ounce silver bullion coins that have a different design. They have different national parks and historic areas in the United States. And the first two coins issued this year are among the top 5 coins sold ever in this series that started in 2010. The Shawnee National Forest was 105,000, and the Cumberland National Historic Park, Cumberland Gap National Historic Park, sold about 70, well, sold exactly 75,000. And the most latest one, the Harper's Ferry, is at 33,000. I don't think we're going to see these types of numbers this year, but this year is already the second highest selling year of these types of coins. Egypt is looking to start up its gold mining business. Here's a nice story about gold miners from Reuters gearing up for growth. They've got their costs down, the demand is up, so they're trying to capitalize. Interesting story about a company trying to turn water into gold and other precious metals. It's not quite that. You read the article. They're trying to extract those precious metals from the water, but they've got a process to do it. Interesting that the British Royal Mint is now going to sell gold bars. They already sell gold bars, and they sell them, and you can store them at the British Mint, but British Royal Mint. But now they're going to do it for pensions. Negative interest rates strikes again. Central bank insanity. Commerce Bank decides maybe they're going to have to hoard billions of dollars to avoid the ECB charges. Under negative interest rates, these large banks, if they they hold their cash at the central bank, they end up having to pay the central bank interest, which doesn't make any sense. They might as well just hold their own cash and not have to pay. Economic data, we saw hiring tumble in the JOLTS report. Job openings soared, but hiring tumbled, and that's probably an impact of the part-time jobs phenomena, where companies are constantly looking to fill part-time positions, but they're not necessarily hiring a lot of them, because a lot of these jobs, they don't get filled because people already have 1 or 2 part-time jobs. They're not really looking for a third, or it doesn't pay to go and pick up a part-time job if you're on benefits. Let's see what we got next is we released a podcast on how the Federal Reserve manages the dollar and avoids collapse. If you're interested, it's definitely worth checking out. It's either at Smaulgld or on YouTube on the Smaulgld channel. Peter Schiff had mentioned that the Fed, he's been on a couple of interviews saying the Fed is going to sacrifice the dollar for the markets. And I laid out a podcast disagreeing with that, because without the dollar, the Fed, the U.S. Treasury, they're out of luck. There is no game without the dollar. They're not going to collapse the dollar so they can protect the stock market. Yes, the U.S. is interested in keeping a healthy and robust stock market because it does reflect on the dollar and the economy as a whole, even though the stock market is not the economy. But the primary concern of the Fed and the Treasury is to promote the dollar and its demand for U.S. Treasury bonds. They're not going to do something foolish. Remember, even when they did QE, they stopped it when the U.S. dollar index went down too low. So check that out. I'd be interested to hear what you guys think. You can leave comments in the comment section. But I don't think that the Fed will ever sacrifice the dollar intentionally just to save the markets. The dollar may eventually collapse for other reasons, but I don't think it's because it'll be from a self-inflicted wound, because they're trying to save the stock market. Shanghai Gold Exchange withdrawals were lower in May. They've been reporting monthly instead of weekly now, and we reported on that. And you can see a chart here. They're still at high levels. I mean, they're basically not as high as last year's record year, but they're higher than 2014, and they're about equivalent to 2013. So the Shanghai Gold Exchange withdrawals, you can check them all out at that link. There's some good history there on it's the Shanghai Gold Exchange withdrawals are not necessarily an indicator of demand in China, but I mean, they're not an exact indicator of demand, but they do indicate something of the physical demand that exists in China. Brexit, as we mentioned, you're going to hear more about that. London gold demand is up on Brexit concerns. European gold sales are up, but especially in Britain, there's been stories about how people are buying lots of gold in Britain because either they've been scared into thinking it's going to be a disaster, or there's just a lot of uncertainty, and gold is a good thing to have when there's uncertainty. Speaking of which, George Soros apparently is shorting stocks and buying gold. And CNBC has been covering gold in somewhat of a positive fashion. You can check out some of the stories there. Bloomberg article mentioned silver acting like gold on steroids. Another article, silver gone mental as investors place big bets. Here again is another story. You can see the pictures of these silver shekels that were found in Israel. It's a very interesting story. And the British pound has been trading like a emerging markets currency because of this Brexit. It reacts to whether, whatever poll says is happening. So, for example, if the polls are saying that the Leave vote looks like it's going to win, the pound drops a lot. If it says, it looks like the Stay might win, then the pound rises. But there's so many polls coming back and forth. So the British pound is moving not in accordance with the economic data that comes out of Britain or the world. It's based on what happens with the polls. And that will be the case until that vote happens. So we're going to have a very volatile next couple of weeks as the polls come out. Fed chatter, as I mentioned earlier, Fed's Meister sees rate hike despite week's job data. Again, the Fed is basically sending the message they want to raise rates. I don't care about the jobs data, because if they did, they would say, well, wait a minute, this jobs data is no good. And we're not going to raise rates if jobs are bad, and that's one of our mandates is full employment. But I take from what you will, but I take from it is the Fed is hell-bent on raising rates, and they will do it. They want to get that dollar index higher. They want to get a couple of rate hikes behind them such that when they need to lower rates or go negative or do QE4, they've got that dollar index up a lot higher than it is now. U.S. economic data, University of Michigan, consumer sentiment dropped a bit, still pretty high though, considering. And the most recent Brexit poll, 10-point lead for leaving. And that kind of shook the markets on Friday. Thanks everyone for listening. Again, if you want to check out Smaulgld.com, you can see all the charts and the links far better than you can on this YouTube video. But thank you very much again for listening, and we'll talk to you next week.